Welcome back to Golden Rule Radio. We're going to call this show the 3% range that we're in with the dollar and gold. We have the dollar in a 3% range between about 97 and 94, and gold is in between our number that we hit on the bottom at 1170 and the top side 1210. So I think this is crucial. I think this is a range about 3% to where when we break out of it one way on either one of those indexes, the dollar index or gold, we're going to see the next trend. Would you say that that's correct, accurate? What do you guys think?
Yeah, I think it's going to be the dollar dictating and gold reacting to what the dollar does. It'll be the dollar breaking out one side or the other. And I think we should put Miles on the spot and ask him which it's going to be, upside or downside, Miles.
Yes, it's going to be upside or downside. And that's always my claim when we're in between two different levels. I like gold staying above 1200 here. I did like to see the pullback yesterday. You know, we got up to what, 1212 or so. We had a little 3 drives with divergence. So didn't surprise me to see it turn around, come down to 1200, but I liked it closing above and now pushing back above 12. So I'd like to see us move back up to the next little resistance level. I'm going to say somewhere in the 1230s. So we'll look at the chart here and kind of see where that's going. The dollar, of course, like you mentioned, on the flip side, taking a bit of a sell-off. I'm not wholeheartedly convinced yet that the dollar is turning down at this point. I think it still has a way to go. I mean, 92.5 or lower would look good, and we're 2 points away from that. With that continuing, this could just be a little break in the trend for the time being, although talking about the 4 key points that we brought up last week, the seasonal movement, where premiums are on pricing, the COT report, I think a lot of things are leaning us towards the continuation of the gold rise, the continuation of the water slide in the dollar. The only thing that's really catching me off guard right now is the Dow closing in on those all-time highs again. I think we're only about 1,000 points away now at this point, and seeing what'll happen when the Dow reaches that level.
Before we leave gold, I do want to find out and let our listeners know what happened yesterday when we did drop from that 1212 to about the 1201 level, because that happened in a matter of minutes. And I thought, okay, here we go, a little plunge protection team or some sort of manipulation of dumping of major contracts. And the only thing really I could find was that a huge hedge fund did exit their gold position, or they trimmed it from 80% of their capital investment down to about 25%. Again, I can't confirm that that's what drove it down, but that had me concerned for a little bit, and I was very encouraged by the fact that we were back up over 1206 this morning. Well, the other thing to mention there, too, is that that was not a counter currency event. So please keep in mind the dollar went down at the same time. So that's a real red flag when you see gold come off sharply for no reason when there's nothing to show for it on the currency side.
Moving to silver, silver's still above the previous lows, even though it has been shellacked lately, down into the 14s. And it's about $1 away from the previous low. I'd like to see it hold that low and move higher. The gold-silver ratios remained in that 80 range, which is about as high as it's been in modern history, except for one time in 92. But in the last probably 50 years, that 80 range is about as high as it's pushed. Platinum's below 800, which hasn't happened in, 10 years since 2008? Platinum's probably a buy if we don't have more industrial metal sell-off in the near future. Related to gold, it's still at its max at 35% below the price of gold.
Right, which I don't think has happened ever.
In 50 years, except for one time in 1982. But who's counting?
Well, the one guy that bought it at that price
yeah,
in 1982 is certainly counting it.
But I mean, relative to today, it's probably wasn't $800 then. It was probably $2. Moving on to other news or markets, what else do you guys have?
You know, I've got my eyes on this Fed meeting coming up in about a month, with Trump letting loose on his Twitter handle towards Mr. Powell, the Fed chair. It'll be fascinating to see if he has any sort of an impact on slowing the Fed down on their interest rate hikes. I don't know that he's going to have that impact, but we do know, and we've been saying on this show since he took office, that he's a big fan of a weaker currency. He does want to spend. He does want to print. He would love to see quantitative easing kick back up. I think he's looking at the Fed as sort of an adversary with his economic plans and the way that he wants to see the markets continue to run, and he wants to see a genuine economic turnaround. And when that happens, we all know what follows. It's inflation.
However, Powell did throw Trump a bone in that last missive where he said something to the effect of the Fed will do anything it needs to. in another crisis.
Well,
so
of
there is
course
a bone
it
there.
will.
Of course it will.
What else do they want? Their only job is to print money.
That's why they're raising interest
Their
rates.
only jobs are to print money, and somehow the Fed Reserve is responsible for the employment rate.
Right.
So go figure that one. I'm tired of the printing conversation. When is anybody going to talk about fiscal responsibility ever?
Well, we are celebrating the 10-year anniversary of quantitative easing. You know, in the McAlvany Weekly Commentary last week, they mentioned that as if it was a celebratory fact, but it was tongue-in-cheek. 10 years of quantitative easing. But over the long term, what does a fiat currency do? It loses purchasing power.
Well, also last week, we crossed the line into the longest bull market in history in the equities market.
I wonder what has spiked that on.
Probably quantitative easing.
That's probably why Robert brought it up.
So we'll just get prepared for that Fed meeting coming up next month. And obviously what the dollar does, what the equities market do, probably will have some say in what they end up doing with interest rates.
If you were to put me on the spot, I still think that interest rates get raised. And it goes back to what you were just saying. They need to have some tools in the tool bag to react to the next market decline. And the higher they can get interest rates before it happens, the more effective the lowering of the interest rates will be in response.
Completely agree.
So that's it for this week. We encourage you to go back and listen to last week's show. If you have any questions on our outlook for the metals markets, there are still 4 very encouraging signs in the metals markets. And as always, you can follow us on Twitter at ICA Gold.
We saw an increase in viewers last week. And so if you're new here, please subscribe to us by clicking the subscribe button below.
You can also head on over to Facebook at McAlvany Financial. Stop by our website, McAlvanyICA.com, or give us a call anytime at 1-800-525-9556. As always, thanks for listening and have a great week.